You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. You might be surprised to hear that music. If you're listening on demand, maybe not, because you're getting this at your usual bat time, your usual bat channel, but we are recording this one day early, listeners. A little bit of a quick hit, a little bit of a Just the Facts, ma'am, edition of Volatility Views, recording right after TWIFO, This Week in Futures Options, on Thursday. Why? Because I have other pressing business on Friday. I will not be able to attend our usual showtime. I didn't want to leave you guys and gals hanging out there, so I thought we'd record a quick hit. We have the once and future Dr. Vix joining us on TWIFO today, so it seemed a waste to not take an opportunity to pick his brain on a little bit of vol as well. So all you folks hanging out there in the live on the pro side, hey, you're getting this in your ear holes right now. Congratulations. For those of you on the on-demand side, we'll cut something together for you so you have a little bit of extra something in your feed. Not going to leave you hanging out there. It's a vol-filled week, at least to the downside. So we want to make sure you got a little bit of content in your life. And Mr. Once and Future and Now Present Vix, a.k.a. Mr. Russell Rhoads, the professore extraordinaire over there at the KELLEY School of Business, and also the author of one or two or half a dozen vol-oriented tomes. I'm glad you could make it. You could join me for a little bit of extra credit in the vol space, sir. What say you?
Always happy to be here, and I like that I'm getting extra credit. People keep asking me for extra credit all the time as a professor,
yes,
which I never give. So now I've got a little extra credit I can give to people. If one of my students hears this and mentions it, maybe that's what they get. Where they'll get.
That's a good little carrot to put out there. In my brief, I never was a professor. My brief time as a TA, I did that for like a year and change. And the professors at Cornell were, shall we say, lazy. So I had to do everything. I would teach the class. I would grade the papers. So it was, I was beset upon by people who wanted extra credit on a regular basis. I could only imagine what you're getting over there as a full actual professor. So intriguing stuff nonetheless. You mentioned extra credit. Our chat is excited. Age saying, ooh, extra innings for the live and no runner on second. Well, I don't know. Maybe we have a runner on second. Maybe we're going to drive him home. You don't know. See. A little bit of a veiled shot at the new baseball rules, I see. Maybe not a fan out there, Mr. Age. I don't know. I'm not a big enough baseball guy to weigh in. But anything that kind of makes the game a little bit more exciting, I'm kind of down for. So if you're hanging out, I've been to some of these, double headers down at the Sox Park where you're there for like 15 hours and it's 1-1 at the end. I could see maybe something that could jazz it up a little bit. But you know what's jazzing things up right now, Mr. Rhoads? It's the markets. If you're a bull, you're in happy camp again. You're wearing your happy pants. Because as we're coming into the end of the session here on Thursday, one day ahead of our usual recording time, listeners, S&P once again feeling its oats, up about 0.6%. The Dow saying, hey, what about me? I'm up about 0.5% too. So Dow also looking pretty decent. NASDAQ up nearly a full percent. In fact, pretty much a full percent, just ticking it as we're talking right now, listeners. The one dark side on the screen is our old friend, the Russell 2000. We were just talking about this on TWIFO, listeners. If you want a little bit of a deeper dive into what's going on with the Russell 2000 and the options activity associated with it, check out TWIFO. Just finished recording that. Should be hitting the network already by the time you're listening to this. Small caps taking a little bit of a break today, off about half a point out there. Mr. Rhoads, of course, this means it is, I think the technical term is a vol apocalypse out there right now. I know we were prognosticating it for 2 weeks last week, so that's already challenging in and of itself. But none of us, if you had asked us in the interim 1 week out, did any of us have a 13 handle in VIX? And maybe Mr. Meatball might have joked. I think he said something about a 12 handle recently. I don't think he was too serious, at least not this quickly. But here we are, a 13 handle. We were just making a big deal about kissing a 15 handle, Mr. Rhoads. That was just a couple of days ago. When we hit 14 just yesterday, I was like, oh my goodness, that's really starting to get down there. 1360 as we're kissing off the show, Mr. Rhoads. So I guess nobody wants vol anymore. Vol is now going out to the woodshed to be slaughtered, sir. What is your thought on just this crazy vol apocalypse week, sir?
Well, I'm not terribly surprised that VIX is down a bit this week. We're you at the very end, you always say, where can they hear more from you and everything. And I typically on the weekend, I will write up a review of the previous week, and then I'll write a preview for the following week. And honestly, there was nothing to write about going into this week, and I have some other things I had to work on, so I didn't do it. So the next time I'm looking around for something to write about, that may impact the volatility markets, and I don't find anything, I'm shorting VIX. Because you know what? I hope I'm making sense with what I'm trying to say there. The really cool thing at the moment, would you have guessed a 14 handle on the June future?
No, I would not.
And the spread has crushed between the two. It's about 235 or 135 right now. Only $1.35 between the two, and that's the kind of number I would expect if next week were June settlement, but it's not. We're still a week and a half.
Yeah,
away
that's
from
what's
June
fascinating. It's not next week.
So
yeah,
this is very interesting to me, and I'm going to go out on a limb here. I'm thinking about buying some 15 calls.
Oh, look at you.
I'm giving serious. I'm thinking about buying some 15 calls because we do have that Fed meeting next week. Right now, the potential decision has gone back and forth between when you look at the futures markets between a potential hike or no hike. Right now, they're looking at no hike, but I feel like they're going to have to be very, very careful with the language this time around. And I wouldn't be surprised if people find things they don't like in the language. So I wouldn't be surprised if we get maybe a little volatility leading up to the meeting. And a little volatility next week out of the meeting as well. So this is the first time I've probably said I'm thinking about being long volatility since before I knew I had to wear a mask on a plane.
That's funny because you used to be all the time buying the upside in the crystal ball.
I know.
That was your role. And
it was my role.
You have abandoned that of late. We just got off the TWIFO program. Obviously, a lot of great tools for CME we talk about there. One of the ones we haven't talked about in a while, the Fed Watch, a very useful tool, especially right around now, listeners. And it's pricing in about 72% probability of nothing, of an unchanged at next week's meeting, and about 28% for a quarter point hike out there. I'd be surprised if that doesn't evolve a little bit as we get a little bit closer to the meeting. It does seem like I just saw an article pop up right now as I was looking at Market Watch about the possibility of a hike popping in there. So I wouldn't be surprised if maybe we see some of those probabilities of a hike maybe tick up a little bit next week. Does that intrigue you, listeners? Are you thinking about loading up on some upside? I will mention, Mr. Rhoads, I was very happy to see that spread collapsing between the June future and the cash, because I'm not sure if you recall, but way back at the beginning of the year, I'm not sure if you were on the episode with us or not. I know the Meatball was, but we saw a huge print going up. I think it was maybe late January, maybe early February at the latest. We saw a huge print, well over 100,000 going up, of the June 15 puts for, I think they were on 8 cents. Do you recall that?
I don't recall being on that program, but we talked about this extensively when I was on with you last week.
Yeah, exactly. So these were ridiculous. We laughed about it at the time. We said that was a terrible fill. They could have done better. So just to prove it, And just to annoy this person who bought 100,000, we went out and bought all we wanted for like 7 cents and below. And so it was a fun thing. It was kind of just content, a bit of a lark for the show. I had completely forgotten that I even had bought those, Mr. Rhoads. And then last week, all of a sudden, I opened up one of the accounts that was associated. We have a bunch of different accounts here, obviously. And I was like, wait a minute, what's this little surge of green in this random account here? And sure enough, it was those puts firing to life. I unloaded a good chunk of them last week for $5. And now I'm working the rest for $1, and they're close to getting filled. Is that not that you're talking well over a 10x on these stupid puts? So that shows you what kind of crazy, nonsensical, rarefied downside vol we are in right now. When the 15 puts are paying off at an 8 to 10x, Mr. Rhoads, you know you're in some 2017-esque vol space, sir.
You can sell them for 80 cents right now, and then you're paying for dinner.
Yeah. Well, you did buy those Boyle 10 puts.
Now you're referring to the previous program. We don't want to confuse people too much.
Yes, we won't. But you are sitting on some Boyle monies.
And Boyle is not an ETF that has different types of that has different types of itch cream in it. It's about natural gas.
Let me run down the numbers here real quickly for VIX, and then by the way, before I even get to we'll get to the top now, and then we'll do the trade for this week. Then I want to hit on some of your ETPs really quickly, because I know you love those more than VIX itself, and they're hitting some new highs as well. And there is some news on that front this week. Really quickly this week in the Just a Facts, Ma'am edition of All Views listeners, let's do a quick top 10 right now. All it took was the complete annihilation of volatility listeners to get one more put to make it into our top 10. You'd think, given everything that's going on out there right now, and it has been for the past week, we'd see 10 for 10 puts out here. Nope. It is still 7 versus 3 calls over puts out there. One more put sneaking into the top 10. Gosh, about 190,000 contracts to break into the top 10 this week. That gets you to the June 40s, followed by number 9, 191,000 of the June 23s. Number 8, 200K exactly of the June 25s. Then we have a put strip, all 3 of them back to back to back. Number 7, 210,000 of the June 17 puts. Number 6, 221,000 of the June 16 puts. And number 5, my personal favorite on the list, 260,000 of the June 15 puts. Oh, so juicy. So ridiculous. Number 4, 261,000 of the June 27s. Number 3, 285,000 of the AUG 60s. Number 2, 329,000 of the SEP 60s. And rounding out the top 10 this week, listeners, 337,000 of the June 30s. You'll notice our friends, the June 40s, are way down at the bottom. So they have been unwound quite a bit. So kind of a weird unwinding there. I guess they weren't too reticent to close the short leg of that spread. Leave the long leg open, see what you can get out there. Speaking of the long leg, Mr. Rhoads, a little birdie just told me you may have done some nibbling while we were talking on the June 15s, right?
I bought 5 of the 15 calls for 48 cents, and that's a reminder to do a little bit more work on them in the next day or two. And that is if we get if we just get a couple of point pop out of VIX, I'm out of it. I'm not. This is not something that I'm. If I get a chance to make money on it tomorrow, I'm making money on it tomorrow. I'm not being greedy like you are with your 15 puts.
I can say maybe I'll put some of my ill-gotten 15 put gains to work on the other side of the strike.
Oh, you would be that would make you a master trader.
That would be just winning on both. That's like the old infomercial. Make money in any market condition using options. There you go.
Just buy a straddle.
Yes. Just leg into straddles and VIX, and all of your worries are behind you. You like that, listeners? You like loading up on some, not even 1 week. Got a week and a half or so on those June 15 calls for a little bit shy of 50 cents. You like those? Are you a buyer there? We do have the Fed meeting next week. Beyond that, not a lot of catalysts for long balls. So that's really kind of a swing for the fences for the Fed meeting. And again, probably not even going to be holding those for that long. But speaking of things that you're holding, Mr. Rhoads, on this Just a Facts, Ma'am edition, let's get out to your favorite product. It seems like every time you are joining us now, we are talking about new all-time highs for your number one holding. So forget my ill-gotten June 15 put gains. Next time I see you, dinner's on you, because your SVIX hitting yet another record high, 25.19 this morning, hanging out at 25 points exactly today, up another 70 cents. So I guess my question for you is, are you letting it go? Are you selling more calls? Is it time to buy the SVIX puts? What are we doing, sir?
I've sold a couple of calls. I probably have sold calls against a quarter of my position that are in the money now. We only have monthly options on this thing, so I'm gonna lose some of my shares at 23. It looks like.
Oh, you poor suffering bastard!
I'm not. I'm leaving it alone. I'm just This is kind of like you said. It's about half my portfolio, and I really do like having a long-term short volatility position in my portfolio. I understand the risks. I understand the short-term risks. The price action in 2022 really gave us a chance to load up in a short volatility product, and this, in my mind, this equates to being long equities. And where I trade in and out is in the equity products. But I leave my short volatility position on. I do own a little bit of ZIVB too, which is the midterm short volatility product. It got introduced a couple of months ago and instantly went down below its offering price of 15, and now it's up a little bit above 17 or so. And honestly, I own that one just to remind me to keep an eye on it.
Just remind you that it exists.
Yeah.
I don't fault you for that. Every time I get the urge to maybe short a little bit of SVIX, I start looking at the put markets out there, and I'm reminded there are no weeklies. Things are still kind of thin. So I end up going out to VIX anyway. So if I'm going to do this, I like your play, a little bit of your VIX 15s, something along those lines. I probably would do that before I load up on a bunch of downside here in SVIX. Plus, that's been a losing trade for a while. So and you need a bit of a move to even get these trades to pay off out there in SVIX for the liquidity concerns we've discussed earlier. I probably would do a downside fly or something if I was going to do anything out there. I've had a little bit better luck with those, which sounds strange in a liquid product to say you're getting multi-leg trades off, but I have had decent success with those, which is kind of ironic, but that's kind of where we fall. Speaking of ironic, sir, or maybe perhaps just much delayed, how long have I been saying on this show, sir, that they're letting UVXY just go to die? They didn't care about it. It's at about 2.25 right now. They're not going to reverse split this thing. They're just letting it go to die. Well, Twitter was very pleased to let me know this week, Mr. Rhoads. Our Twitter account just lit up. Have you seen this? Have you seen this? Everybody wanted me to know that the reverse split is in. So yes, we are getting it. The news has been announced, listeners. UVXY no longer being let to die. They're actually taking some proactive steps to make you want to consider trading this thing again. I believe it is June 23rd that the split is going into effect. It will be 10-for-1. So you're still getting to around 22.5 at today's level. So not exactly exciting. I would have preferred maybe a nice, I don't know, a 20-1, 15, somewhere in that realm. That gets me, a little bit more excited. Otherwise, we're just going to be doing this dance again in a few months. Same problem we have in UVIX. But then again, beggars can't be choosers. I wanted them to do something with this product to make it relevant to me again. And they have done so, Mr. Rhoads. So I am at least mildly excited. What are your thoughts on this much anticipated reverse split, sir?
Oh, I wish they had done. I feel like they should have done more as well. We know the decision makers behind this one. We should call them up.
We should. Once it gets below the 5 handle, what are you doing?
Yeah, exactly. I know from back in the days when I was at SIBO and I'd talk to the people that were running a different VIX related ETP. And it really is a pain in the butt to run one of these things. You get criticism. You get, I can only imagine the number of calls that you get about, VIX was up. Why am I down 20% in this leveraged VIX thing? Because nobody really understands what the product is. I can understand letting it die on the vine, but they've decided not to let it die on the vine, which I guess is a good thing. But is this kind of like pulling somebody out of the pool who is turning blue and not giving them CPR,
letting him die on the concrete instead of
it's like it seems like a half measure.
It does.
That's a terrible analogy, and I wish I could take it back, but
too late. It's out there. It has been recorded.
That's all I could come up with. Was just some sort of it just seems like a half measure.
UVXY is a drowning child in the pool that they are still allowing to drown just on the concrete.
And now it's laying on the side of the pool, and a bunch of people are taking pictures of it.
And no mouth to mouth, no resuscitation whatsoever. But you're right. I get it. It's people, they got a lot of wiseacres like me taking pot shots at them. All I care about is one thing. I want this thing to be higher so I could fade the downside. That's all I care about. So they have other issues they need to contend with. I get it. But still, for my use case, it has not been there of late, and I shall let them know about it. But intriguing stuff. It's going to be there. It is kind of a half measure. We'll be talking about this. It'll be back below 10 in a couple of months, Mr. Rhoads, and we'll have the same conversation again. And so
when are they going to split it?
Yeah, exactly. So they can look forward to getting more heat from me and other folks out there when that happens. But hey, in the meantime, we're getting something. Something is better than nothing, Mr. Rhoads, which is also what this episode has been for you, listeners. A little bit of something better than nothing for Vol Views. But before we get out of here, Mr. Rhoads, I want to go back really quickly because we didn't get a chance. Obviously, it's a short Just the Facts, ma'am, edition. Didn't get a chance to break down all the action in VIX this week, let alone get a taste of Russell's weekly rundown. But there was one trade that went up this week, actually went up today, that was kind of intriguing. In fact, if you want to deep dive into it, our buddy, the Flow Master, just went into it in depth on the option block. If you missed that, maybe we'll cut that in for you here, listeners, so you can check that out now.
I'm assuming you were involved in this trade, Mark, because I know that at this level you probably want to lean long.
It's a little too. I do, but it's a little too small for me. You know, I don't get out of the bed for, at least a couple 100,000 contracts.
Gotcha. So yeah, the biggest odd block today is the biggest trade in the entire market, which is 102,000 of the VIX July 23 calls that we saw bought from like 84 cents up to 87 cents. The average was 86.7 cents. And this was a nice, clear-cut, directional trade in VIX. It's not part of a spread. We've seen some of these big, giant, 100,000 by 300,000 ratio spreads trade over the last month or so. This one is just a single. And it is opening, even though there's 144,000 contracts that exist. I was able to confirm it's an opening trade. Customer bought, market maker sold about 23,000 contracts, and the executing firm positioned 80,000 contracts. So this is kind of like your classic facilitated customer trade, and was probably negotiated for a bit. But it's $9 million worth of premium spent on calls that will only make money if VIX gets up to about 24, in the next month and a half. So this is an interesting one. It obviously could be a bet on volatility spiking. It also could just be a hedge. It just could be somebody that's pretty happy with the rally that we've had, has a very large portfolio, and prefers to hedge it with VIX calls instead of SPX puts, which is, they're very, very similar in, the characteristics that the market starts to get ugly. I did do the math, and if you P&L this to VIX, where we hit the highs in 2020 over 82, then this is like a $600 million trade.
82.
I couldn't resist. So you got to think about the headlines. So it's an interesting one. I mean, it's just a $600 million trade. And then I got another one.
Before you get there, yeah. I do love your optimism. The 80 handle stress test on this trade is fantastic. Mr. Rock Lobster, I heard you laughing there. What are your thoughts on someone gobbling up all the July upside here? And hey, if VIX gets to 80, it's looking pretty good.
You know what? I tell all my students, if you want to buy those calls, that's fine. But you could also buy a 17 put for like $1.20. And in a week, that 17 put will probably pay for all those calls, even 100,000 contracts. So I love that people want this, but I think they forget that they could also be easily financed. That's the only thing I will say about this. I love the fact that people go after the calls and totally ignore the puts and VIX, but I'll leave it there.
Hey, if they want some puts, I got some for them. Just hit me up, listeners, on IM.
And by the way, I do approve of Henry's enthusiasm on the 83.
That was great.
Educating everybody.
Why would you back test any other level than the highest level that VIX is hit?
Go big or go home.
I love it. No 30s or 40s for the Flow Master. He's right to the top of the mountain. I love that. That's probably how this guy sold his trade to his risk manager. Look, the VIX hits 83. I'm looking good in this trade. How can I not do this?
it did happen twice, right? 83 was the all-time high. Well, 82.79 was the all-time closing high in March of 2020. And then if you go back to 08, it was around 82, just above 82, I think. So there's 2 data points to say 82 is the top.
There you go. 2 data points. That's all this guy needs to put this. I'm surprised he didn't do more size. Why wouldn't you do 500,000? You got 2 data points. But if you did miss it, or maybe you just want to hear some other viewpoints on this, Mr. Rhoads, I know you noticed this one today as well. An intriguing trade. It's not all puts all the time. There are some calls, including today, nearly 103,000 of the July 23 calls going up for around 86, 87 cents. It was facilitated. They did chunks at different prices, but that's kind of where it went out at the end of the day. So, Mr. Rhoads, an intriguing trade. Not quite your June 15s for $0.50, but in that ballpark, a little bit farther out of the money. Did you notice this trade, and what are your thoughts on it, sir?
I didn't notice the trade until you told me we were going to talk about it. So then I started digging around a bit on it. I think it makes an awful lot of sense. Kind of expensive. You got to break even up almost at 24 or so. But we know it doesn't take a whole lot to get VIX back up into the upper 20s very quickly. And, just maybe taking it. We do see an inverse relationship between VVIX and VIX sometimes. And that's because VIX reaches such a low level that it brings out some call buyers. And I feel like that's what this trade is indicative of right here. Somebody's looking around for a way to get long volatility. And they consider, being able to pay under $1 for, 6 figures of the 23 calls and get, how many weeks would that be? I don't know, 7-8 weeks of potential vol spike exposure. Looks like a pretty smart trade to me, relative to, the future was around 1740 at the time. So even the July future's not at that much of a premium.
Yeah, I thought that was kind of interesting. Our buddy, the Flowmaster, he made the salient point that if VIX spikes back up to 83, these calls are going to be looking pretty good.
Now that is the kind of insight
exactly
you pay for.
That was quality insight. We had a good laugh at his expense.
And I love him, and
he's the best.
You know that I say that with a big smile on my face. I'm not nasty like everybody.
It was an unexpected data point to come from him, which made it all the more sweeter and all the more hilarious.
That's the Flowmaster.
So if you want his detailed analysis on how these look if VIX gets back to its all-time high, spoiler alert, they look pretty good. Then check out the option block that's on the network pretty much by the time you hear this, listeners. All right, we held him for extra innings. We have held him long enough, listeners. Let's let him go back about his very busy day writing on his Substack. Mr. Rhoads, I'm glad you could join me for this impromptu kind of just the facts, ma'am edition of Vol Views. Did you have fun, sir?
I had a lot of fun. You know me. If I'll talk about VIX until I'm, blue in the face, and God knows nobody in the household that I live in ever wants to hear about VIX.
I did lie to you. I told you 10 minutes. It's been a half an hour, but we had fun.
That's all right.
We had fun out there at the end. You can't shut us up when you're talking about crappy VIX puts or SVIX new upside or all kinds of other nonsense. UVXY reverse splits. A lot of stuff happening this week. We had to get to it. So thank you for making this show possible, Mr. Rhoads. Before we go, if folks want to check out your Substack or your Twitter, where should they go? What should they do?
Substack's my full name, russellrhoads.substack.com. Trying to do a better job of being active on it. And, definitely doing a review every weekend and then writing things up as I see interesting stuff during the week, and doing a Sunday preview when there's something to talk about. But like I said, going into this week, I just couldn't find anything of interest to talk about. And there's a lesson to be learned in that one too.
Yeah. When VIX is boring, buy the puts.
Yeah. So yeah, VIX was it looked like there wasn't going to be anything to talk about, and if there wasn't going to be anything to talk about, probably should have taken a look at getting short volatility.
Some puts or whatever your preferred flavor of getting short is. Check them out at Russell Rhoads, 2 S's, 2 L's, easy for me to say, RHOADS on the old Twitter. A lot of great stuff there, including links to his Substack. You can see how he's managing the tail end of this now 6-month-long VIX upside trade odyssey. Maybe that was him coming in to buy 100,000 of the July 23s. You're keeping the trade alive. That's what you're doing, aren't you, Mr. Rhoads?
No.
That was you.
No.
That's your new trade for the second half of the year. You're going to keep buying insane upside until all the money is gone. Check him out.
I did that forever in the guessing.
Yes.
And
it did not work out well. Spoiler alert, listeners. Check out the archives of this fine program if you want to see what we're talking about. That's going to do it for our Just the Facts edition of Volatility Views. Also going to do it for our content on Friday. I have been called elsewhere. Wanted to give you folks a little bit of a taste of some vol content so we didn't leave you hanging. Back again on Monday with the old OB all the way through to next Friday. Another full-length episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.